Start. Yes, people, a very, very happy afternoon to all of you. No energy.
Happy afternoon.
One more time. Loudly, in chorus. Much better. So, guys, let's continue with the class. And illustration 3 is what I'm planning now. 2 we've completed?
Yes, sir.
Yes. Illustration 2 completed. Let's head forward to illustration 3. It says that X Limited acquires 70% of equity shares of Z Limited as on 31st March 2001 at a cost of 70 lakh rupees. Can I do one thing before I go forward? Can I do a quick recap of what we did in the last class about dividend? Yeah, we'll do example 17 itself very fast. We'll do very, very fast. So in example 17, we said that 31st March is date of acquisition and date of dividend. Now, this is the date when the dividend has been declared and paid. So this dividend is paid out of which profit? In the past profit. So this dividend is called as what? Any dividend that is paid at the end of the year is always interim dividend. Interim dividend. Any dividend that is paid in the middle of the year is final dividend. Okay, not okay. So this is paid at the end of the year. So it is interim dividend. Interim dividend is paid from this year's profit, from current year's profit. During the current year, is the profit belonging to the holding company or is it to the old shareholders? Old shareholders. So this is pre-acquisition dividend. Pre-acquisition dividend. Pre-acquisition profit. From that we pay. It is pre-acquisition dividend. Any problem? No problem. Date of acquisition 1/4. Date of dividend end of the year. So what dividend this is? Interim dividend. Correct? Interim dividend, generally the dividend is paid out of current year's profit. The question says interim dividend, but money paid out of earlier year's profit. Then do what question says. If nothing mentioned means always interim dividend is paid from current year's profit. In current year, who are the shareholders? H Limited were the shareholders. So now this dividend will be paid to whom? H Limited will receive it pre or post? Post acquisition dividend, because interim dividend is paid from the current year's profit. Current year profit is post profit, which is coming after acquisition. So from the post profit, the dividend that you pay is called as post acquisition dividend. Case 3. Date of dividend end of the year. Interim dividend. Acquisition middle. Question said nothing from where the interim dividend is paid. So it is assumed that the interim dividend is paid from the current year's profit. In current year's profit, this part is pre-dividend. Pre-profit, pre-dividend. This part is post-profit, post-dividend. Any problem? Case 4. The dividend is paid in middle of the year. So which dividend this is? Final dividend. Final dividend means current year. 24-25, the dividend paid is of which year? 23-24. So out of 23-24 ka profit, you have paid the money. During that period, where the H Limited the shareholder? No. Where H Limited the shareholder? No. So from the pre-profit, if you pay pre-dividend, you will minus it from the pre-profits. Correct? So this dividend is pre-dividend. Any problem? Online people, any problem?
No, sir.
No, sir.
Now, case 5. This is date of acquisition. This is date of dividend. In middle of the year, if you pay dividend, which dividend this is? Final dividend. Final dividend is paid off the previous year. Out of previous year's profit, out of the pre-profit. Whether this is pre or post, does it matter? Pre and post matters when the dividend is paid from current year's profit. Here the dividend is paid from the past profit. So this is pre-dividend. This is pre-dividend. Any problem? This one. This is date of acquisition. This is date of interim dividend. Now the question said that even though this is the dividend given in the middle of the year, we say this is interim dividend. Got it? So will you take this as final dividend? No. Assumption will come into picture only when the question is silent about the nature of dividend. When the question is silent about the nature of dividend, year-end dividend, interim. Year between, final. The question says that in between dividend is interim. You'll take what question says. So now this is interim dividend. Interim dividend is paid out of current year's profit. Current year's profit. In current year, this is the pre-period. This is the post-period. Pre-profit, post-profit. So pre-dividend, post-dividend. Any problem? No problem. Question number 7. Date of acquisition, date of dividend. Date of dividend, they said very clearly it is interim. How much? 180. But current year's profit is how much? Only 150. So extra 30 from where did you pay? Past profit. So pre-dividend is 30 and post-dividend is 150. Date of dividend, date of acquisition. So here, did we receive this dividend? No. So after the dividend was distributed, then we got the shares. Did we receive any dividend? No. So when we have not received any dividend, where is the question of pre and post? So no pre, no post. Okay, not okay. So let's continue with illustration 3. Yes, boss. Example 18, हाँ okay, let me talk about this revision. Okay, rectification. Now what happens is that if the question says that the dividend is pre-acquisition dividend, the question we have agreed, we have discussed that, or we have agreed that this is a pre-acquisition dividend. Plus, H Limited has received it. Holding company has received it. Holding company has received which dividend? Old shareholders dividend, we are receiving it. Old shareholders dividend, we are receiving it. Old shareholders ka profit, we are receiving it. And that we are wrongly credited to P&L. So my question is, before acquisition, this is date of acquisition. This is before acquisition. Before acquisition period, who were the shareholders? Old shareholders were the shareholders. During this period, whatever the profits were earned, that profit belonged to whom? Old shareholders. But that profit currently is there with whom? Company. It is there with the company. Company has not given it. So company will give this in future. So in future, if the company gives it, it comes to whom? H Limited. H Limited in future will receive the old profit. Does it belong to them? No. So now this old shareholder, at the time of selling the shares, what he'd have done is he would have collected two amount from the H Limited. One, he will say that whatever is the share capital that I've paid, that minimum you give me, plus whatever is accumulated profits that I have not taken, which is still there with the company, that also you give me in advance. So the profit that we will receive from the H Limited in future, that profit we give in advance to whom? Old shareholders. Got it, not got it? In the investment. So while I purchase the investment, share capital is worth 1 lakh rupees. Accumulated profit 2 lakh. Total how much? 3 lakh. So I'm paying total 3 lakh rupees to whom? Old shareholder. Now out of 3 lakh rupees, now the company in the current year pays 50,000 out of the old profit. So that 50,000, is it my dividend income? No, it is recovery of my investment. Recovery of my investment. So out of 2 lakh, in the current year, I got 50,000 ka dividend. This is called as pre-acquisition dividend because this 50,000 dividend, though it is given in current year, it is out of past profit. Past profit means pre-acquisition profit. So this dividend is pre-acquisition dividend. Who has received it? H Limited has received it. And why did H Limited record this? They have wrongly credited in P&L. So when all these three conditions are satisfied, then you have to pass one rectification entry in the books of H Limited. Rectification will be done in the books of H Limited. What is the rectification entry? Yes. Correct. When the dividend was received, you pass the entry bank to dividend income, which is P&L, which is wrong. To reverse the P&L, what will I do? Give a debit to P&L. So P&L account debit to investment. So this is a rectification entry. P&L account debit will affect where working note for consolidated reserve and surplus. And to investment will affect my working note 2, which is the calculation of goodwill and capital reserve, cost of control. Okay, not okay? No need to do rectification. When? If dividend is not pre, it is post. So post dividend is my income. So I'll record in my income, nothing wrong in it. Or dividend I have not even received. When I have not received the dividend, I have not recorded anything. When I have not recorded anything, will I rectify anything? No. Or H Limited is not wrongly credited. Means what? They have correctly reversed in the investment. So when the entry is correctly passed, the 50,000 dividend what is received, the entry that is passed is bank to investment. When entry is correctly passed, will I do any rectification? No. In that case, when the when the dividend is correctly credited to investment, in working note 2, calculation of investment, should I minus the pre-acquisition dividend? No. In the consolidated reserve and surplus, should I reverse the P&L? No. Got it, not got it? Got it, not got it? Okay. When you are doing rectification in books of H Limited, will you do any rectification in the books of S Limited? No. In S Limited ka books, that is AOP, I'll just do the pre and post ka minus. If it is pre-dividend, minus from pre-profit. If it is post-dividend, minus from post-profit. Any difficulty? Online people, any difficulty? So in the books of S Limited, no rectification as such. We just minus pre-dividend from pre-profit, post-dividend from post-profit. We don't do any rectification as such. Rectification is done in those books who's accounted wrongly earlier. So H Limited does the accounting wrongly, hence we're rectifying it there correctly. Okay, not okay. This is what we've learned in the last class. Can I go back to illustration 3? Okay. So all these points again we'll be discussing while we're doing the questions. So here the question says that X Limited acquires 70% of the equity shares of Z Limited as on 31st March 2001 at a cost of 70 lakh rupees. Okay. The following information is available from the balance sheet of Z Limited. Who is X Limited? Holding company. Who is Z Limited? Subsidiary company. Whose balance sheet is given? Subsidiary company ka balance sheet is given. Okay. In that property plant is given, investment is given, current asset, loan, debenture, current liability. Any problem? No problem. What is missing here? What is missing here? Share capital is missing here, and reserve and surplus is missing. Share capital and reserve and surplus, if it is not there, how should I calculate goodwill CR? So I can't use liability side approach. So far in all the question to calculate goodwill CR, you did investment minus net asset. Net asset to calculate, you have two route. One is liability side approach, second is asset side approach. In this question, liability is not there. So what route you will take? Asset side approach. If all these values are at fair value, take as it is. But if these are not at fair value, these are book value, then you are supposed to do revaluation, and then calculate the net asset for the goodwill purpose. The following revaluation have been agreed upon, which means the above figure is not fair value. The above figure is just the book value, which is the old value. So we have to now upgrade to the new value. So property plant equipment to be upgraded by 20%, investment down by 10%, which means apart from property and investment, all the other assets are carrying at the fair value. They are the true value, today's value. Z Limited subsidiary declared and paid dividend at 20% on its equity share as on 31st March 2001, end of the year. What dividend is? Interim dividend. Paid out of which profit? Current year's profit. Whose face value is 10 per share. Face value is 10 per share. If face value is 10 per share, what is the paid up value? What is the paid up value? Same 10 per share. When we calculate dividend, do we calculate on the face value or paid up value? Always paid up value, paid up value, paid up value. Since paid up value is not given, we assume that the face value is equal to paid up value. Got it, not got it. So dividend will be calculated on the paid up value. If 10 and 10 are face value and paid up value, what the hell is this 20 rupees? Sorry, 20 is not given. Given somewhere. X Limited purchased the shares of Z Limited 20 per share. So what is 20 then? 10 is the premium. 10 is the premium. Now this premium meant to whom? 10 rupees the worth of the share, which is the face value of the share, but you pay 20. So extra 10 is there, no? This extra 10 has gone to whom? Oh my God. You're telling Z Limited?
X Limited purchase.
My dear Piyush, did the company issue the shares to X Limited? Or did holding company acquire the share from somebody? So this money, 70 lakh, which X Limited is paid, has it gone to the company? Always when the company is issuing the shares for the first time, company will collect the money from you and issue the share. Subsequent transfer takes place between the shareholders. For example, Kalpavriksha Academy is going for listing tomorrow. You are the new shareholders. You are the new shareholders. He's laughing. Varun Davarnalike ni papa. Kalpavriksha Academy is going for listing tomorrow. You are the new shareholder. You gave me 1 crore rupees. I gave you shares. You gave me 1 crore rupees. I gave you shares. This is called as fresh issue of share. Fresh issue of share. During the fresh issue, if I issue that shares at premium, that premium will be collected by the company. And the company calls that money as security premium. Got it? Not got it? So 10 rupee ka share, I gave you for 15 rupee. Got it? So for you 10 rupees face value, 5 rupees premium. For me 10 rupees is capital, 10 rupees, 5 rupees security premium. Got it? Not got it? Now this 15 rupees cost of share, you gave it for 30 rupees. You gave it for 30 rupees. So what is your profit? 15 rupees is your profit. 15 rupees is your profit. So 15 rupees is the cost of investment and 15 is profit. This 15 profit is what is called as premium. So that premium who will collect? KVA Limited did the fresh issue to the new shareholder. Face value 10, security premium 5. So share capital 10, security premium reserve 5. For you investment value is how much? 15 rupees. Now the new shareholder is selling the goods to, selling the shares to the further shareholder, new shareholder. Correct? Will you sell it at the same 15 rupees? No. With this 15 rupees, you will collect extra some money. Let's suppose you're collecting 10 rupees extra more. So what is the selling price? 25 rupees. In that 15 is cost. 10 is what? Premium. In the 10 and the between this period, the company has earned the profits, no? Reserve and surplus, which is not distributed. That per share is this 10 rupee. Got it, not got it? So now the new shareholder, so imagine this new shareholder is holding company. So this shareholder is selling the shares to H Limited. So before H Limited acquired the shares, this company would have earned some profits. We call that as pre-acquisition profit. So total pre-acquisition profit divided by number of shares. I'll get pre-acquisition profit per share. This is that 10 rupees. Okay, not okay. So that 10 rupees H Limited pays. Got it, not got it. So how much is the total investment of H Limited? 25 rupees. Okay, not okay.
Okay.
So now here H Limited has acquired the share. Acquired from whom? The old shareholder. I mean the previous shareholder. By paying 10 rupees extra. Or rather, I would say 15 rupees extra. Yes or no? 10 rupees face value. 10 rupees face value. 15 rupees extra you're paying. So this 15 is what? Premium. In that, this company enjoys 10 and 5 is enjoyed already by whom? The company. Got it, not got it. Got it, not got it. Any difficulty here? No problem? Okay.
So extra paying and also
Huh. Correct. Because it'll keep on growing in the future. So basically, here 10 rupees the face value of the share. 10 rupees the face value of the share. KVA gave this 10 rupee worth of share to 10 only to the shareholder. Got it, not got it. Shh. Fresh issue. Purvi, face value 10. Same face value I'm collecting. Any problem? No. Now, after this process, the company has done some profits. That profits is currently with whom? Company only. But that profit belongs to whom? The old shareholder, that is previous shareholder. But company did not distribute that dividend. In future, who will get it? H Limited. So now, new shareholder or this previous shareholder says that I will not give you the share unless and until you give me these profits in advance. So now the old shareholder, along with this investment of 10 rupee, he is charging 10 more rupee. So totally H Limited is paying how much? 20. To whom? The old shareholder. 10 is towards capital and 10 is towards the undistributed profits, which you call premium, you call whatever name you want to give, you give. Doesn't matter. Purjida. So this 20 rupees on the whole goes to whom? The previous shareholder. Got it, not got it. This does not go to the company. Am I loud and clear? Though this was not required, but still, since you answered it wrong, I thought I'll explain it. Now, what is the requirement, people? Calculate the amount of goodwill capital reserve on the acquisition of shares of Z Limited. Very good. How do we proceed, people? Working note number 2. Normally, we do know that is no more working note now. That is the main answer. What is it? Calculation of goodwill or capital reserve, which is also called as cost of control. Now, particulars, working, amount inner column, amount outer column. Tell me, people, what is a net asset? Sorry, what is investment? What is investment? 70 lakh rupees. Can you please tell me? Can you please tell me total how many number of shares? Total how many number of shares? Number of shares into 20 rupees is equal to 70 lakhs. Yes or no? We paid totally 70 lakh rupees for all the shares put together. If 20 rupees cost of one share, then for 70 lakh rupees, how many shares? 20 rupees is the cost of one share. Then 70 lakh is cost for how many shares? Cross multiply. 70 into 1 by 20. Very good. So 3,50,000 shares we have purchased. 3,50,000 shares we have purchased at 20 rupees each. Any problem? Again, I'm repeating. The question very clearly said that we have purchased the shares of Z Limited at 20 per share. 20 rupees is cost of one share. 70 lakh is cost for how many shares? Cross multiply. You will get 70 lakh into 1 by 20. So basically 70 lakh by 20. So 3,50,000 shares you have purchased. 3,50,000 shares you have purchased. 3,50,000 shares you have purchased in total. How much have you paid per share? 20. So 350 into 20 is how much? 70 lakh rupees. This is the total investment. Total investment. Total investment. Should I make any adjustments in this or not? Think about it. Dividend is given. My simple question.
Yes.
My simple question. When was the acquisition done? 31st March 2001. Now look at the diagram. Look at the diagram. 31st March 2001 is date of acquisition plus date of dividend paid, which means 31st March who was a shareholder. In the shareholders register, whose name was appearing? H Limited. So this dividend would have gone to whom? H Limited. H Limited. Okay, not okay.
Yes.
The question does not say anything whether the dividend received is being taken to P&L or investment. Is being credited to P&L or credited to investment, nothing mentioned. Now here what I see is 70 lakh is the investment value, total investment value. Now the question is silent. What is the treatment of pre-acquisition dividend? Will you say that from the 70 lakh already pre-acquisition dividend is subtracted, or should you subtract further? We have to subtract. Why? Because 70 lakh is the total money that you've paid to acquire 3,50,000 shares. அப்போனா இந்த 750 வந்து என்ன பண்ணணும்? I have to minus the pre-acquisition dividend. How do you know this is pre-acquisition dividend? First step. End of the year dividend given means what dividend? End of the year dividend given is interim dividend. Okay, so this is interim dividend. Interim dividend is paid out of which year's profit? Nothing mentioned. Nothing mentioned means current year's profit. In the current year, was H Limited the shareholder? No. So during the year, H Limited was not shareholder. So this profit is pre-profit or post-profit? This is pre-profit. From the pre-profit, if the interim dividend is paid, it is pre-dividend or post-dividend? Pre-dividend. So first condition, I have a pre-dividend. Pre-dividend received by H Limited. Yes or no? What is the second condition? Total we have three conditions, no?
Sir, H Limited has received.
First one is the dividend should be pre-acquisition. Is it a pre-acquisition dividend? Yes. Second, this dividend should have been received by H Limited. Have they received it? Yes. So far, can you look at the question and tell me, is the dividend being credited to investment? If yes, this would have been the lesser value. So it is not credited, which means where it is credited? It is credited in the P&L. It is credited in the P&L. Okay, not okay. So should I minus or not minus? If all the three conditions satisfied, I have to minus the pre-acquisition dividend from the investment one place, and second I should minus from the consolidated reserve and surplus. Okay, not okay. Very simple, no? What is the money that you paid from your pocket? 70 lakh. If the dividend received is already credited to investment, then the value would have been lesser value, no? But यहाँ पे lesser value दिख रहा है कि higher दिख रहा है? हाँ, so investment is not been reduced yet. So I will minus it now.
Investment
हाँ.
into P&L, third condition.
That is assumption. Assumption. Because forget credited to P&L or not, that is a different question. My point is from the 70 lakh rupees pre-acquisition dividend is deducted or not deducted? Not deducted. So what I should do? Deduct it. Very simple. அவ்வளவுதான்.
It's important.
So now, less pre-acquisition dividend, which means in the 70 lakh rupees, that dividend is included. That dividend is included that we have to eliminate. So how do you calculate the dividend? How do you calculate the dividend? 3,50,000. 3,50,000 number of shares. What is the paid up value per share? 10 rupees. What is the total share capital? 35 lakhs. On the share capital 35 lakh, how much percentage? It is 20%. 20% into 20%. How much it is? 7 lakh. Got it? Not got it. With this 7 lakh rupees, will you multiply the percentage or not? Will you multiply the percentage of holding? Will you multiply? So this 3,50,000 rupees is not the total share capital of H Limited. This is the number of shares. This is the number of shares acquired by H Limited. Total share capital is something else. It could be 5 lakh, 6 lakh, 8 lakh, 10 lakh. It could be something else. We don't know what that is. Got it? Not got it. So do not do the percentage of holding. 7 lakh is the dividend, pre-acquisition dividend that is received by H Limited. So that you have to minus. So 3,50,000 shares into 10 rupee paid up value into 20% of that. It is 7 lakh rupees. In other words, 35 lakh rupees is capital into 20%. If I minus this, what is the balance, please? Sorry? 63 lakh. This is investment excluding pre-acquisition dividend. Got it? Not got it? Now, this I have to do comparison with what? Less net assets. Less net assets. Share capital. Share capital.
Sir,
Share capital.
30.
Share capital is not there.
350% DDN.
Madam. Okay, fine. Reserve and surplus. She's very intelligent. She says that, sir, 3,50,000 shares is held by H Limited, of S Limited. So 3,50,000 shares, if I divide by 70%, I'll get for 100%. So I will know the share capital, total share capital of, of S Limited. But where is reserve and surplus? How will you find out?
Sir,
हाँ तो वो तो खाना ऐसे खाना तो ऐसे क्यों खा रहा है? Now you will do net asset method. You will calculate the net asset value. From that, you'll minus the share capital. Then you will say this is reserve and surplus. Why? The question is asking you to find out reserve and surplus. Putting so much effort makes sense. There is no need. In life, everything is possible.
but sir, the share capital correct आएगा.
हाँ. If you do 3,50,000 divided by 70%, you will get the share capital value. But where I'll get stuck is I will not know what is the reserve and surplus. Hence, I cannot proceed with the net asset method. Sorry, I can't proceed with the liability side approach. Hence, I have to choose the asset side approach. Okay, not okay. So I'm not doing any of this. Directly asset side approach. Asset side approach. And for this, I'll take the help of working note number 1. Working note number 1. Working note number 1. Calculation of net assets. Particulars. Working and amount. Now, property plant equipment is how much? 120. Property plant equipment 120. Now, question says that PPE should be up by 20%. So, can I say plus 20%? So, 120 plus 20% is how much? 144. Next, investment 55. Investment 55. Down means minus by 10%. How much it is? 49.5. Can I take rest all at the book value itself? Current asset 70 lakh. Loans advances 15. Loans and advances 15. 15% debenture 90. So minus 15% debenture 90. Be careful, people add income. This is liability. So minus current liability 50. Minus current liability 50. Tell me the balance, people. Online, no response. 138.5. Okay. Now my question to all of you, this is called as what? Total net asset of S Limited. Don't take this 138 and put it there. Please understand, we don't own 100% company. We have the ownership only to the extent of 70%. So entire net asset does not belong to us. Only 70% belongs to us. H Limited's holding is 70%. So what is the net asset of H Limited in S Limited? Net asset of H Limited in S Limited. 96.95. Very good. 96.95. So come back and substitute here. 96.95 in terms of lakhs, how much? 96 lakh 95,000. 96 lakh 95,000. You got 96 lakh 95,000 worth of product by paying only 630. By paying only 630. So what is the money that you have saved?
33,000.
Correct. 33 lakh 95,000 is capital reserve. 33 lakh 95,000 is capital reserve.
तो इसमें वो share capital और reserve and surplus अलग नहीं
नहीं करनी जरूरत नहीं है ना. You don't have to segregate share capital and reserve and surplus because we are following here asset side approach. I'll tell. Now, can I continue? Are we done with this?
Yes.
Capital reserve 33.95. Sorry? What do you want? Depreciation? அவன் கேட்டா நான் பண்ணிட்டு போறேன். கேட்கலையே. நீ 31st மார்ச்க்கு வாங்கி 31st மார்ச்க்கு வேல்யூ பண்ணி 31st மார்ச்க்கு டெப்ரிஷியேட் பண்ணினே எப்படிப்பா? அந்த பிபிக்கு வந்து கொஞ்சம் மூச்சு பேசுறது கொஞ்சம் தெம்பா ஒர்க் பண்ணல. 1 year நல்லா ஓடி துண்ணாதான் ஓடம் போடும். அப்பதான் டெப்ரிஷியேட் போட்டு ஒர்க் அவுட் பண்ணணும் நம்ம. Is that okay? Oh my god. Now, sixth question. Sixth is homework I gave. It's easy also. I gave you practical question 6 as homework. I know I didn't give illustration 6 as homework. Wait, let me check. तो एक काम वहां से उठ के इधर I'll put it ऊपर. You come मेरे यहाँ पे आजा सामने. I said very clearly PQ6. How this PQ6 is illustration 6?
You have to say illustration 6. When you said you question 6. The question 6 तो practical question में click होगा ना दिमाग पे. Illustration.
तो illustration क्या करे? छुप जाए जाके. मैं वही तो बोला next question 6 है. I'll do इसको okay. Now can I do illustration 6? Can I do illustration 6? This will be homework, but we'll discuss it very fast. Okay, this is homework. It's similar to what we've done now. A Limited acquired 60% shares of B Limited at 20 per share. Last question 70%. This question 60%. Last question price per share 20. This question price per share 20. They have given B Limited ka balance sheet. Equity shares they have given. There share capital is not given. Here share capital is given. Any problem? No problem. 10% debenture, trade payable, PPE, investment, current asset, loan advances. What is missing? Reserve and surplus is missing, which means still I can't go ahead with liability side approach. I have to do what? Asset side approach. Got it, not got it. So between last two questions, this and this question, what is the difference? This they gave it here. Now, on the same day, we declared dividend of 20%. And as agreed between both the companies, PP were to be depreciated at 10%. You want a depreciation, no? Siddharth? PP downward minus 10% and investment is to be taken at the market value 60 lakh. Calculate goodwill CR. Manageable, not manageable. Easy question, same question, no difference. Easy question. Take this as homework. Now let's do seventh question. This is a little challenging. Please concentrate. Sure.
Acquisition date.
Date of acquisition is not given. Now, since dividend is declared by B Limited on the date of acquisition itself, when is the dividend declared? On the same day declared. So we'll assume that on the balance sheet date, balance sheet date also is not given. No dates is given. So everything is happening on same date. So balance sheet of the same date, dividend of the same date, acquisition on the same date, everything on same date.
So
doesn't matter. You are doing on the balance sheet date, boss. I said balance sheet date. Balance sheet date is equal to date of acquisition is equal to date of dividend. So everything is pre only, no? Post will not come, pre only.
So
you have to mention it. State the assumption in note. Huh? See, here, this is kind of assumption only, no? Assumption. I'm assuming, if you use the word, I'm assuming the assumption, or you declare it, everything's happening on the same date. At the end of the day, you're giving a note to the person who's correcting the paper that this question is solved, keeping in mind that the date of acquisition and the dividend declaration is happening on the same date. So you have to inform on what basis have you taken the question and done it. You have to inform that, no, that is what you're doing. So whether you say this as a note or assumption, doesn't matter. Both are one and the same. But note is required. If you don't like assumption, go with note. No problem. Okay, happy? Now, can I go to illustration 7? Now listen to me very carefully. H Limited acquired 3,000 shares in S Limited. H Limited holding company acquired 3,000 shares in S Limited at a cost of 4,80,000 rupees on 31 July 2001. Date to be noted. Last line says that assume the profit is accruing evenly and the calendar year is financial year. What is calendar year? Jan to December. That is the financial year. And 31 July is coming in middle of the year. So acquisition is happening somewhere in the middle of the year. Somewhere in the middle of the year. Be careful. The capital of S Limited consisted of 5,000 shares of 100 each fully paid. Out of 5,000 shares, how many shares have we acquired? 3,000 shares. How many percentage? 60% we have acquired. Any problem? No problem. The profit and loss account of this company for 2001. 2001. What is the financial year? 2001 is the financial year. Jan to December. Jan 2001 to December 2001. Showed an opening balance of 125. And the profit for the year is how much? For the year is how much? 3 lakh rupees. At the end of the year, it declared a dividend of 40%. Record the entry in the books of H Limited in respect of the dividend. What are they asking? End of the dividend declared. Who will receive the dividend? H Limited. What entry will H Limited pass is what they're asking. Okay, not okay. Exactly. But still, I will do the diagram. Now, this is financial year 2021. 2001 it is. Okay. It begins with Jan, ends with December. Please tell me, when was the acquisition done? 31 July 2001. 31 July 2001, date of acquisition. What have you acquired? 3,000 shares at a cost of 4,80,000 rupees. I'm just putting the data. In exam, so much not required. This is for your understanding. The capital of S Limited consisted of 5,000 share. So share capital is 5 lakh. Any problem? Of S Limited. Share capital of S Limited. The P&L of this company on the opening date. Opening P&L is how much? 125. So what is the P&L? Reserve and surplus ka balance? 1,25,000. Reserve and surplus is 1,25,000. Okay, not okay. Profit for the year, 3 lakh rupees. Profit for the entire year. Profit for year, 3 lakh rupees for the entire year. Any problem? During the year profit. Now tell me people, how much is pre-part, how much is post-part? How much is pre, how much is post? सब डेटा बोर्ड में जैन फेब मार्च अप्रैल मई जून जुलाई 31st 7 month is pre 5 month post. What are you calculating? Oh, like that. But why are we supposed to do all that in exam and come? What are they asking? அவ்வளவுதான். Journal entry for dividend receipt.
Pre हम recovery of cost. Post.
Oh my God, I didn't know that. Okay. ஆசைன்னா நீங்க பண்ணுங்க, எனக்கு ஒண்ணும் இல்ல, பாத்துக்கலாம். So far data is clear. Now at the end of the year, now this is the main point. End of the year, dividend is declared. It is declared dividend. Declared here, assume that it is paid. Assume it is paid also. Dividend declared and paid.
ऐसे कैसे assume कर रहे हैं? नहीं मतलब
ऐसे एक क्वेश्चन पूछना, ये क्वेश्चन ऐसे पूछना. Now 40% it is. Oh my god, 40%. My simple question is, what is the dividend that the H Limited will receive? Dividend that H Limited will receive. Yes. Number of shares held by H Limited is 3,000. What is paid up value per share? 100. How much it is? 3 lakh. 3 lakh into 40%. How much it is? 1,20,000 total dividend received. My question is, this dividend is what dividend? Interim or final? Interim or final dividend? Interim dividend. It is interim dividend. Any difficulty? Any dividend that is paid, declared and paid at the end of the year, it is interim dividend. My question is, interim dividend is paid out of generally from which profit? Current year ka profit. Now I should check that whether there is sufficient profit to pay the dividend or not. Current year ka profit is how much? 3 lakh. What is the total dividend required? I'll kick you. 120 is dividend to be paid to H Limited. I want the total dividend. 5 lakh into 40% is how much? 2 lakh. Donkey fellow, 3 lakh rupees is what? Total profit of S Limited. So I will compare with the total dividend to be paid by S Limited. So S Limited ka paid up capital 5 lakh into 40% how much? 2 lakh total we have to pay. In that 120 we will receive majority and remaining 80 will go to minority. So, okay. You can't compare 3 lakh entire ka profit with 120 and decide pre and post. Got it, not got it. So what I will check is 3 lakh is full year ka profit for everybody. 2 lakh is dividend for everybody. Do I have the sufficient money to pay the 2 lakh dividend? Yes.
Pre-post.
Madam, 3 lakh profit available in current year to pay a dividend of 2 lakh. इसलिए बोल रहा हूँ, you don't go in fast forward mode. You come with me. You hold my hand and come along with me. You don't hold somebody else's hand and go forward. Current year profit 3 lakh.
Sir, opening balance है. So during 3 lakh, so total to 4 lakh 25.
125 where it is coming. 120 is coming. Why are we going to opening? Oh my god. Wait. Shh. Leave. I will teach her. You guys leave it. Only I can handle her. Shh. Shh. No. Online people. These people are fighting here. Wait. Let them resolve the fighting.
Yes, your the total profit and reserve and service नहीं लेना है, सिर्फ current year का So current year profit. My current year profit is only 3 lakh and 1,25,000 is previous year profit. But now they को make us हो गया. हाँ. 3 lakhs है. हाँ. उसी से ठीक है. बोला करना है. उसमें से 120 है. 50 पर 80,000. हाँ ठीक.
Got it? Now, the total dividend to be paid by S Limited is 2 lakh. Out of 3 lakh profit. So do I have the current year profit sufficient to pay the dividend? Yes. Okay. So my question is, this 2 lakh dividend is paid out of current year's profit. 7 months is pre-profit. So dividend will be paid from 7 months dividend is paid from pre-profit and 5 months from the post-profit. Okay, not okay. Okay, not okay. क्या doubt है बताइए?
Post profit 3 lakh है.
3 lakh is the profit for the entire year, boss. Profit for the entire year. Now, this 3 lakh rupees ka income is earned evenly. Look at the line. It says that assume the profits is accruing evenly, which means what? 3 lakh into 7 by 12. How much it is? 1,75,000 is the profit that has been earned by the old shareholders in the olden period. So this is pre-profit. And 3 lakh into 5 by 12 is how much? 1,25,000 is the profit earned after the holding company acquired the shares. Got it, not got it? No, don't ask anything. Just listen. 125 is what? Post profit. Now, 120 ka dividend is there? 120 ka dividend is there?
Yes.
Who received this 120 ka dividend? It's limited. 120 ka dividend is for the entire year, 12 months. Yes or no? In that, 5-month ka dividend is post dividend. 7-month ka dividend is pre dividend. So can you split and tell me the pre and post dividend? 1,20,000 is dividend for 12 months. For 5 months, how much? Cross multiply. 70,000 is the post dividend. So this is 70 is pre. Okay. So this is 70,000 pre-dividend, 50,000 post-dividend. Any problem? 175 is pre-profit. From this pre-profit, this is the pre-dividend paid. This 125 is post-profit. From this post-profit, 50 dividend is paid. Any problem? This pre-dividend is a recovery of investment. It is recovery of investment. Any problem? So I will credit to investment account. This 50,000 is my income. It is my income. So I will credit to dividend received or P&L account. Any problem? Got it, not got it. Now, what is entry? Money received. So bank account debit. How much money is H Limited receiving? 1,20,000. In that, how much is the recovery of investment? To investment, which is pre-dividend for 7 months, which is 70,000. Any difficulty? Remaining is our income, which will go to P&L, which is post-dividend of 5 months, 50,000. So this is the entry. Now tell me what is it out? Bank account debit, to investment, to P&L, 120, 70, 50. If you go and see the way they have explained, no, you will decide about quitting consolidation. If you want, you can try and see. And they have given an option to also. Take a big red pen and put a slash. Why? Because point 2 discussed above can arise only if there is a definite information about the profit utilized. Purida, I'll tell you what it means. In practice, such treatment is rare. In real life, it may be possible. But when you get any consolidation question in exam, it is not possible. To understand, the question very clearly said that the profits that is earned is evenly all throughout the year. In reality, will it happen like that?
No, sir.
In reality, Jan month's ka profit will be more, Feb ka less, March ka even less, April can come in more. So it will be up and down profit. Got it, not got it. So accordingly, your 7 months ka profit will be something else and 5 months ka profit in reality will be something else. If I want to get exact profit, then they have to give me monthly profit. Jan profit, Feb profit, March profit, they have to give me the actual data. That is more time consuming. So what they told in question, assume that I'm earning equal profit all the month. So 1,20,000, sorry, 3 lakh is profit for the 12 months. For 1 month, how much? Divide by 12. 3 lakh by 12 is how much? 25,000 rupees on average. We're earning profit every month. Every month ka profit is 25,000. So keeping that in mind, we have solved it. Okay, not okay. If the profits differ, the answer will differ. So they have done some assumption and they have calculated. This is not required. Just skip this. Point 2. Which point 2? This point 2. Discussed above can arise only if there's a definite information about the profit utilized. How much profit actually is coming in pre-period and post-period. In practice, such treatment is rare. Means for exam purpose, it is not possible to do that. Okay, not okay. Any difficulty in illustration 7? बस उतना ही बनाना आपको ज्यादा बनाना आप बनाओ मेरे को भी प्रॉब्लम नहीं है बट एग्जाम में मत करना इन एग्जाम यू विल डू व्हाट यू आर आस्किंग दे हैव आस्क्ड अ वेरी सिंपल क्वेश्चन record the entry in the books of H Limited in respect of dividend receipt. So bank account debit 120 received. In that 7 months is pre-dividend, minus from investment, credit from investment, and remaining 5 months is post-dividend. Take it to income. Game over. Now tell me what is it out. Call Soma, Piyush, is not there online.
Sir, current year का profit sufficient ही हुआ तो base से लेंगे ना.
Correct. Now imagine current year's profit is not sufficient. I will take from the past year's profit. So accordingly, answer will change. Got it, not got it. We did that question, no? 180, 150, 150 and 180 ka. Difference 30,000 taken from the last year's profit. Yeah. Correct. Got it, not got it. Bas. Now, I'm modifying the question based on the student's demand. I'm modifying the question based on the student's demand. Shh. The student is saying that, shh, no, don't. I'm the teacher. मैं पैसे ले wait. मेरे को पाप लगेगा if I don't tell. Imagine, shh. Imagine the dividend that has been declared as, imagine, only for numerical purpose I'm taking, 4 lakh. 4 lakh ka, how much percentage of shares do we hold? 60%, correct? No? Boss, I'm telling that total dividend to be paid is 4 lakh. Listen now, properly. I'm taking a hypothetical situation. Total dividend to be paid is how much? 4 lakh. Earlier it was how much? 2 lakh. Now how much? 4 lakh. How much is my profit? How much is my profit? 3 lakh. Current year profit is 3 lakh rupees. But how much is the dividend to be paid? 4 lakh. So now 60% of that comes to H Limited. How much it is? 2 lakh 40,000. 70% we own. Okay, then multiply by 70%. How much it is? Into 70 percentage, 2 lakh 80,000. Do we have sufficient profit in the current year? No. Why? Because 3 lakh is the profit, 70% belongs to H Limited, 30% belongs to minority. So 3 lakh ka 70% is how much? 2 lakh 10,000. I have only 210. Shh. Current year profit only is 210. But I'm paying how much? 280. So extra how much I need? 70,000 profit. This 70,000 profit will come from where, opening 1,25,000 rupees. Now, Purvi asked, what if the dividend that you're declaring in the current year is more, which I can't sufficiently pay out of current year's profit. So I'll utilize last year's profit. So I'm telling that 4 lakh is the total dividend. 4 lakh is total dividend. What is the total current year profit? 3 lakh. What is total dividend to be paid? 4 lakh. How much share H Limited has? 60 or 70? I wrote 60 first. She said 70. 60%. Sorry, then 60%. This donkey only changed, asked me to change. 4 lakh into 60%. How much it is? 2,40,000 rupees. We will get dividend. Okay. Out of 3 lakh profit. In the 3 lakh profit, how much belongs to H Limited? 60% of 3 lakh. How much it is? 1,80,000. 1,80,000. Correct? Remaining profit belongs to minority. 180 ka profit, current year ka profit only 180 is available to pay a dividend of 240. How much I'm shortfall? 60,000, there is a shortfall. So this 60,000 I take from the opening profit. Correct.
और 60 का जो हम earlier लेते वो pre-planned.
Correct. Now clear? Okay. In this 180, what we will do? You will further bifurcate between 7 and 5. So 180 ka 7 by 5 is how much? 7 by 12 and 5 by 12 is how much? 75,000.
60,000.
So this 75,000 is post profit. These both put together pre-profit. So what is the entry now? Bank account debit. How much are you getting? Totally 240 you're getting, guys. 240 you're getting totally. To investment, how much? This 60 pre-profit, this 1,05,000 pre-profit. Both put together how much? 1,65,000. To dividend income post profit, how much? 75,000 rupees. Got it? Not got it? So this is past year's profit plus current year's pre-acquisition profit. This is pre-acquisition profit of past year plus current year ka pre-profit. And this is 5 months ka post-profit. Got it? Not got it? If you know the concept, let the question be how much you are twisted, you can still manage. Now don't twist anything further. Now clear? This is 40? Okay, 40. Now happy? Can I continue? Now.
ये जो 4 lakh हमें पे करना है, 4 lakh dividend declare.
4 lakh आके S has to pay to H. In that 70% to H Limited, 30% to, sorry, 60% to H Limited and 40% to minority. Declared and paid. But they have current year profit will 3 lakh. Clear? Hai? Now, next question. Okay. 2 over, 3 over, 6 over, 7 over. Practical question 9. क्या solution?
तो जर्नल में डायरेक्ट थोड़ी लिख सकते हैं
She wants working. Oh my God. That's all. Oh, no, very simple. She wants working, I'll do the working here. Total dividend declared by S Limited is how much? 5 lakh into 40%. How much it is? 2 lakhs.
उसमें 60% हमारा है
1 second. 2 lakh. 60% dividend of H Limited is equal to 2 lakh into 60%. How much it is? 1,20,000. Now that you got 1,20,000, you can do here. 1,20,000, do this here. 1,20,000 into 7 by 12 and 1,20,000 into 5 by 12. 7 by 12 is pre, 5 by 12 is post. Now clear? Srini, you are able to follow Kana?
So yes, sir.
Others, please take practical question 9. Practical question 9.
Yes, sir.
Over? Please take practical question 9. Tell page number.
10.87.
10.87.
Yes.
Okay. 9th question. It says that A Limited acquired 1,600 ordinary shares. What is the meaning of ordinary shares? Equity shares. Equity share ka another name is ordinary shares of rupees 100 each of B Limited on 1st July 2001. A is holding company, B is subsidiary company. 1,600 shares acquired on 1 July 2001. On 31st December 2001, the balance sheet of two companies is given as follows. So the calendar year is financial year, Jan to December. Okay. Share capital is given, reserve and surplus is given, trade payable is given, short-term borrowing is given, PPE, non-current investment. Note number 5, 340. So investment in B Limited costing 340. Any difficulty? Now, let's look at the main paragraph. The profit and loss account of B Limited, who's B? Subsidiary, showed a credit balance of 30,000 on 1 Jan 2001. So opening AOP, opening profit is how much? 1 lakh? Sorry, 30,000 rupees. 30,000 rupees. Out of that, a dividend of 10% was paid on 1st August 2001. I'm not bothered this is final or interim. They have told that the money is paid out of this 30,000 rupees. This 30,000 is the profit before acquisition. So this is called as pre-acquisition profit. From the pre-acquisition profit, if you pay dividend, it is called as pre-acquisition dividend. Game over. Game over. Now, imagine had this word not been given. Out of, like this is not given. Had they told dividend 10% was paid on 1st August. Then 1st August is what? Middle of the year. Final dividend. Final dividend is paid off the last year. Still it is same only. Got it, not got it? Logic clear, not clear? Okay. A Limited. Who's A Limited? Who's A Limited? Purvi? Holding company. Credited the dividend received to the P&L account. Right or wrong? ಇದಕ್ಕೆಲ್ಲ ನಾ ಸತ್ಯಮ சொல்லி கொடுக்க முடியுமா after A Limited why full stop is coming if you ask me I'll cry only
अलग अलग बता दो तो ये लिमिटेड का वो लाइन नहीं है वो एक लिमिटेड उसमें चला गया पहले वाले से
from wherever you studied previous institute no I'll put a letter of complaint to them that you have not taught this properly
said एक sentence important
Purvi you have got very tough competition A Limited credited the dividend received to its P&L account. Right or wrong? This would have been right. This would have been right had the dividend was been given from the post profit. Post profit, post dividend, take it to P&L, no problem. But this is pre-profit, pre-dividend. So this should have been recovery of investment, credit to investment. Rectification will come or not. Three conditions to be satisfied. First is this is pre-dividend. Second, received by H Limited. Third, if credited wrongly. Rectification has to be done. Impact will come in two places. In working note 2, from investment I have to minus. In working note 4, consolidated reserve and surplus also have to minus. Because the journal entry is what? P&L to investment. P&L debit is working note 4 minus. And investment credit is working note 2 minus. Is the image clear?
Yes.
The plant and machinery which stood at 150 on 1 Jan 2001, which stood means book value 150 on opening balance was considered as 180 on 1 July. So book value is given on beginning of the year. Market value is given at the date of acquisition. So for 6 months we have to do depreciation. And we have to get the revised book value on 1 July 2001. Okay, not okay. This figure is to be considered while consolidating the balance sheet. Okay. The rate of depreciation given 10%. Prepare CBS. CBS is homework. I will do the working note. Now, diagram very fast. Tell me people. 1/1/2001. Shh. 1/1/2001. Share capital is how much? 2 lakh. What is the P&L balance? It is reserve and surplus. How much? 30,000. Am I right? Shh. No discussion. If I see anybody discussing among yourself, I'll screw all of you. I'll be very strict from now on, as I'm telling you. Take me seriously. நீ மொக்க போடாதம்மா ஏமா இப்படி இருக்கே நீ 30 so now when is the shares acquired 17 okay 1/7/2001 date of acquisition. How many shares acquired? 1,600. Investment value. That is not the answer. What is investment value? Fast. They donkey fellow. Investment value என்ன சொன்னா 100 is என்றான் பாரு. எனக்கு எல்லாம் வந்து சேர்ந்திருக்கு பாத்தியா? 3,40,000. எப்பரா இருக்கீங்க? ஒருத்தர் full stop எப்படி வருதுன்னு கேக்குறான். ஒருத்தர் சம்பந்தம் இல்லாம ஆன்சர் சொல்றான். Now, when is the dividend paid? 1 August. 1801 dividend paid 10%. Okay, now dividend is paid. On the paid up value. So what is the capital on that date? 2 lakh into 10%. How much it is? 20,000. Now listen, 20,000 dividend paid out of past profit. Sufficient, not sufficient? Sufficient. If it was not sufficient, I would have taken that money from the current year's profit. But here it is sufficient. So don't ask me to twist the question and do one more time. I will not do this time. Now, end of the year is 31st December 2001. I'm coming one by one. Wait. Now, listen. Market value of the machine is given. How much it is? 1,80,000. Book value is given 1,50,000. So I have to minus the depreciation for 6 months. So I will get what? Book value as on this date. Okay, not okay. Once I get a comparison of book value, market value, I'll get revaluation profit or loss. Then for this period, I have to do additional depreciation. Data clear or not clear? अभी करेंगे ना दिखाता हूँ. Okay, so far game is clear. Now, working note 1A. Reserve and surplus account. Tell me people, 1101. What is opening balance of reserve and surplus? By balance brought down 30,000. There are two. Oh my God. Okay, let's do this way. Now this is the catch point here. Listen. This P&L 82,000 is of S Limited at the end of the year, and GRS 1 lakh rupees. Listen now, very important point. End of the year is 31st December 2001. GR का balance is 1 lakh. P&L का balance is 80,000. Total is how much? 82,000. So total is 1 lakh 82,000. Now listen to me very carefully. In the question, they have told that opening P&L is 30,000. Opening GR, they have not told. Whenever in exam, they don't mention anything. If you remember, we did a similar question, but here they mentioned that this GR is belonging to earlier year's profit. Even if nothing is mentioned, you will take GR as the opening balance. You will always take GR as the opening balance. So which means if GR is there at the end of the year, it is coming from the earlier years. So opening also it is there. So what is the opening balance? 1 lakh rupees. So what is my total opening balance? 1,30,000 rupees. Okay or not okay? This is based on assumption. This is based on assumption. Very, very important. Now tell me people, when is the dividend declared? 1801. Correct? So what is entry for dividend? P&L account debit to dividend. So to dividend, how much it is? 2 lakh into 20% or 10%? 10 percentage. How much it is? 20,000. So can I say current year profit I'll get? So 31,12,01 by P&L. How much it is? Current year profit. This is current year's profit of 12 months. 20,000. 72,000. Okay. This is 72,000 profit for current year, 12 months. 12 months. You will ask me, sir, what this nonsense is? Every time 12 months only comes.
Acquisition के पहले का
No. No. Tomorrow, next class, for the very first time, we will be doing consolidation where we'll have to prepare the P&L for 2 years. And I'll give one more question where you have to prepare P&L for 3 years. So if I'm preparing P&L for 2 years, 2 years ka gap, then 24 months will come. 3 years ka gap means 36,000 will come. So we are doing 2 extra question, which is the old question, which is still there in your syllabus, but not been asked in your ICA book also, scanner, nowhere, exam also they've asked. Which means chance of that being asked is very, very high. If you observe all the questions that has been given by ICI so far, yes, only 1 year ka data. Current year, balance sheet, maximum you go back to the beginning of the year. Date of acquisition, beginning of the year. So I'm going to give you 2 questions where the acquisition is happening 2 years ago, 3 years ago. In that case, how do you do consolidation? We'll do 1 month question in each method and we're over. Okay, not okay. With that, your concept will become very, very strong. Now, 1,30,000 is the earlier year's profit. 72,000 is current year profit. So what is your total profit, people? 2,02,000 is total profit. In that, if 20,000 profit is dividend, 20,000 profit is distributed as dividend, what is the undistributed profit? 1,82,000. So are you able to understand how to read the ledger? Everybody? Okay. Next comes working note 1B, which is AOP of subsea. Particulars, percentage, pre-profit, post-profit. Now tell me people, general reserve and P&L opening is how much? Opening 1 lakh and 30,000. Okay. Now listen. This I have recorded in the AOP. Next I have recorded is 72,000. My question is, this 72,000 is current year's profit, no? Current year's profit full 72,000. Is it completely post-profit? No. This much part is pre-profit and this much part is post-profit. So how much months? 1 Jan to 1 July, which means 6 months. 6 months is pre, 6 months is post. This is called as time adjustment. This is called as time adjustment. So 72,000, can I do 6 months pre and 6 months post here itself? 72 into? Yes. So add time adjustment of current year's profit. Time adjustment for current year's profit. 72,000 into 6 by 12. How much it is? 36,000 and 36,000. Any difficulty? If I add all of this put together, how much it is? If I add all of this, is how much it is? It'll be 2 lakh, donkey fellow. It'll be 2 lakh 2,000, which is total profit. Because so far, what have I done? I've taken these two data. I've taken these two data and only put in the statement format. Correct? So now with this, what am I supposed to minus? From this 2 lakh 2,000, what am I supposed to minus? I'm supposed to minus this dividend. So basically, what we are doing in ledger is what we are repeating in statement. So in statement, I have to minus dividend, less dividend. Which dividend? Pre-acquisition dividend is subtracted from the pre-profit. How much it is? 20,000. Or will you do 20,000 the percentage? Should I multiply with percentage or not? No, because this is AOP ka, subsidiary ka AOP. So I want the entire dividend to be subtracted. Multiply by the percentage I'll do when I do working note number 2. When I calculate the pre-acquisition dividend to be subtracted, that time I'll multiply the percentage. Here I'll take the full 100% ka dividend value. This 20,000 represents the total dividend paid by the subsidiary company. Total. From the total profit, this is the total dividend paid. Now people, the balance profit what you get now, will be equal to 182. Now tell me the balance here. Balance profit. 1,46,000 and 36,000. This will be equal to 1,82,000. No, wait, I'll do that. I'm just trying to put in a head. This is my total undistributed profit. From this undistributed profit, this much is distributed. So this is the balance undistributed profit. Logic clear or not clear? In exam, no need to do the balancing right now. After we do further adjustment, then we'll do the balancing. But why I did the balancing is because I wanted to put a concept in your head. So what we did in ledger is what we've done so far in the table. Now we have to do adjustments for revaluation. Working note number 5. Calculation of revaluation profit bar revaluation loss. Market value as on 1/7/2001. How much it is? 1,80,000. Book value as on 1/7/2001. I have to calculate. So for that, they have given what? Book value on 1/1/01 is given. How much they have given? 1,50,000 minus depreciation. 1,50,000 into 10% into 6/12. From 1/1 to 1 July, 6 months ka depreciation. How much it is? 7,500 you have to minus. Balance how much? 1,42,500 is the book value. So what did I do now? 1,50,000 is the book value of the asset in the beginning of the year. Book value beginning of the year. From here till 1 July, we have 6 months. So 6 months ka depreciation if I minus, I'll get the book value as on 1 July, which is date of acquisition. So now this book value on 1 July, I have to compare with the market value on 1 July. Hence, I'll get the revaluation profit and loss. Now tell me people, 1,42,500 worth of asset in your book is now 180. So value of the asset is increased by how much? 37,500. So this is revaluation profit. This incremental benefit belongs to old period. In the old period, who were the people? Old shareholders. So this goes to the pre-profit. Correct. So add revaluation profit. Give reference to working note number 5. 37,500. Now we are doing to depreciation. From 1 July to end of the year. Working note number 6. Depreciation. Calculation of depreciation from 1/7 to 31/12. Depreciation on revalued figure. What is the revalued figure? 1,80,000 into 10% into 6/12. How much it is? 9,000 depreciation we have to charge.
Yes.
From this period to this period, on 180, the depreciation is how much? 9,000. Out of 180, some depreciation is already charged. 6 months ka depreciation already charged. So minus depreciation already charged. People will make mistake here. Be very careful. what is the value that you'll take? Will you take 150 or will you take 140 to 500? You take still 150 only, because always we calculate depreciation on the opening balance, not the in-between balance. So 1,50,000 into 10% into 6 by 12. So please understand this 6 by 12 is July to December, whereas this 6 by 12 is Jan to June. Okay, not okay. The first depreciation what we calculate is Jan to June. This is July to December. How much it is? 7,500, which means out of 9,000, we already depreciated for 7,500. So what is additional depreciation? 1,500 is the additional depreciation. This asset was utilized in the post period. So depreciation also should be minus from the post period. So less additional depreciation. Working note number 6, 1,500. Any unrealized profit? Which profit should come here, upstream or downstream? This is subsidiary ka profit. No, I'm asking in general. Which unrealized profit I should eliminate here? Upstream or downstream will come here. In AOP, upstream comes or downstream comes? Upstream means S sold to H. So who booked the profit? S. So that profit we have to eliminate. So upstream will come here. In this question, there is no upstream, no downstream, no elimination of profit. Now, can we go ahead? Tell me the balance. 1,83,500 and 1,34,500. Only 34,500. Okay. Now H limited ka percentage and minority ka percentage. Total shares of B limited is 2,000. In that we have acquired how much? 1,600. How much percentage? 80%. And minority is 20%. Tell me the value, please. 36,700. Then 27,600. 6,900. Any problem so far? Working note number 2. Calculation of COC, cost of control. Investment. The question very clearly said that the pre-acquisition dividend is received where? In the P&L. It is recorded in P&L, which means this investment is at cost. Means from this pre-acquisition dividend is not subtracted. So this is the investment value before minusing pre-acquisition dividend. So investment before pre-acquisition dividend, how much it is? 3,40,000. From that minus pre-acquisition dividend, how much? 20,000 is total dividend into 60%. How much? 60,000? 16,000. Okay. 80%. 3,24,000 is investment after pre-acquisition dividend. And this is what we compare with the net asset always. Now, minus net assets. Share capital 2 lakh into how much? 80%. 1,60,000. And pre-acquisition profit 1,46,800.
That is
3,06,800 worth of benefit you got by paying 324. So how much extra have you paid?
17,000. Correct.
Goodwill is 17,200. Is it correct?
Next working.
I have a question to ask, but I'm just wondering, should I ask or not?
What?
It might complicate your life, is what I feel. Okay, after completion, I'll ask. But I'll ask the question, I'll not answer today. So you will sleep with suspense only tonight. So if you can tolerate bad suspense, then you ask. I mean, you encourage me to ask the question.
तो अगर आपका सवाल पूछोगे तो पहले आंसर दो।
फिर तुमको क्या मिलेगा?
आज तो गलत है।
हाँ, वेरी गुड.
सही है गलत है कितना पास है वो गलत।
That I'll tell. No problem. I love this. Working note number 3. Calculation of minority interest. वो 4 is this 3, madam. 1A, 1B, 2, 3. Donkey fellow. Share capital 2 lakh into 20% है 40,000. Then
Plus 3
pre-acquisition profit how much?
336.
Post-acquisition profit how much? Of minority 6,000. 6,900. Total how much? 83,600.
Next calculation. Sorry, consolidated.
Working note number 4. Calculation of consolidated reserve and surplus. Heads Limited reserve and surplus is how much?
Yes, sir.
240 plus 57, 200. So 297, 200. 297, 200. Please tell me, is this 297, 200 right or wrong? Why? Because in this you have included pre-acquisition dividend. So I have to minus that. So I'm doing the rectification now. So pre-acquisition dividend. Always remember, whenever you minus the pre-acquisition dividend in the working note 2, if it comes here, it will come automatically in working note 4 because we're doing double entry system of accounting. So 2 impact will come. 16,000. Which kana? Entry not required. For consolidation, we never do any entries. How much is the balance?
2,81,200.
2,81,200. Add post acquisition profit of this limited 27,600.
3,08,800.
Wait, throat is paining now. I need break. In that break, promise me nobody will talk to me. 27,600. Balance how much? 3,08,800.
Okay.
Kadam. What is the share capital of S Limited? Sorry, H Limited. 5 lakh. Reserve and surplus is coming from working note number 4, 3,08,800. And working note number 3, minority interest 83,600. If these 3 are matching up, Tina, our answer is correct. Rest you know how to do. So balance sheet, can you take homework? All in people, balance sheet, can you take homework?
Yes, sir.
Oh. Now, we will take a break of 7 minutes. And then we'll come back and continue with the next question. Thank you so much.
Question?
Yes, people, welcome back to the break. So let's continue. There's one more question that I want to solve. But before that, I'll ask that question which I wanted to ask. My simple question to all of you is that this 2 lakh rupees share capital what you take now? Is it on the date of acquisition or is it end of the year? Date of acquisition. Okay. This share capital what you take, is it on the date of acquisition or is it end of the year? How is it that this 2 lakh is end of the year and this 2 lakh is in the date of acquisition? This is date of acquisition. Listen now. H Limited का investment 2 lakh. Sorry? No, that wait, you think and tell me. I'll just put the full point, okay? S Limited ka, S Limited ka capital is, let's suppose, now I'll make this 4 lakh and share capital is 5 lakh. So how much percent investment are we holding? 80% investment we are holding. So now we have to cancel this with investment. So when we do consolidation, This 5 lakh is knocked off against this 4 lakh, and 1 lakh which is there, it goes to minority interest. I'm only talking about capital. I'm not taking reserve and surplus into consideration. This is what I taught you in the very first class. Why does the share capital of S Limited does not come to consolidated balance sheet? Because it gets knocked off with the investment. So 5 lakh minus 4 lakh, how much is capital left? Still 1 lakh. That we transfer to minority interest. So 5 lakh capital is knocked off with 4 lakh here. So remaining 1 lakh. This 1 lakh is transferred to minority. Got it, not got it. My point is, in between the year, let's suppose the share capital is issued. So opening balance of share capital is knocked off. Share capital during the year of S Limited. I'm telling the share capital issued by S Limited. New shares issued by S Limited or bonus issued by S Limited will increase the capital. That capital, how will you knock off? That also you have to knock off, no? When you issue the share capital, it goes to both holding company and minority in the same proportion, let's assume. The new shares are issued to both holding and minority in the same proportion. Bonus issue is done in same proportion. Correct? How the hell will you try to knock off the share capital? Think and tell me now whether the share capital is on the date of acquisition or at the end of the year. Whether this 2 lakh rupees is on the date of acquisition or the end of the year. For convenience, I said date of acquisition, but you have to seriously think about it. So I'll talk about this in the next class. So I'm putting a suspense in the head and leaving. Full night you should not sleep today. That is my desire. My question is, you said this 2 lakh rupees is the share capital on the date of acquisition. I'm not saying whether it is right or wrong. I'm telling you, what do we do on the date of acquisition? Imagine the share capital is 4 lakh rupees of the investing company. That is holding company is invested 4 lakh rupees in the capital of S Limited, which is 5 lakh. Got it? So when I merge these both together, what happens? Investment is 5 lakh. Sorry, investment is 4 lakh. Investment 4 lakh. Share capital 5 lakh. Share capital of S Limited should not come in the consolidated balance sheet. So I do knock off these both. So this 4 and this 5 I knock. How much is balance in share capital? 1 lakh. This later we transfer to minority interest 1 lakh. So this becomes 0. Got it, not got it. So this 5 lakh you're telling is the capital in the beginning of the year. That is on the date of acquisition, basically. I'm telling that after date of acquisition, if any share capital comes, which is issued to both holding and minority, what is the treatment for the share capital? After date of acquisition. Let's say bonus is issued. If bonus is issued. So in that case, this share capital, what we're discussing here, is it really on the date of acquisition or is it end of the year? No, don't say anything. I'm just telling you to process.
But जो bonus issue होता है, it is out of reserves and surplus. So consolidated balance sheet prepared.
I don't want answer today. Tomorrow I want. Today you will think I have put a seed, I put a problem in your head. Today I don't want answer, nor I'm going to answer. Because if I start answering, I'll take 1 hour to answer. That's the whole point. So now I'm going to the next question. I put the seed in your mind. Germinate that seed today. Let a plant, tree, fruit blossom tomorrow and give me the fruit tomorrow. And don't ask me anything. I put the seed. I've sown the seed now. क्या चाहिए मंडे छुट्टी दे दूंगा बस Now let's go to the next question. Scanner question 10. Scanner question 10. We have a new point to learn here. One new adjustment that you learned today. Not adjustment, one new point here rather. Mark this question, very important. Heads Limited. Scanner question 10. Scanner question 10, page number 30. यहाँ पे. Heads Limited acquired 64,000 equity share of 10 each in S Limited on 1 October 2019. Heads Limited acquired 64,000 shares of 10 each in S Limited on 1 October 19. Balance sheet of two companies is given on 31st March 2020. So this is the balance sheet of 1920. Now, equity share capital is given. Both the companies, general reserve is given. P&L balance is given. Preliminary expenses. You have studied somewhere. Schedule 3. It's not Schedule 3. Schedule 3. Schedule 3. Schedule 3. Schedule 3. तो तुम लोग बोलते हो, तुम लोग ब्रिटिश है ना, इसलिए हम लोग नॉर्मल इंडियन लोग हैं। इंडियन हम लोग शेड्यूल बोलते हैं। आई एम नॉट ब्रिटिश इंडियन, so I'm not just casual tree and all. That's my cup of tea. Now the question is, what are we supposed to do with this? Can you please tell me, in Schedule 3, whenever we came across the term preliminary expenses, miscellaneous expenses, discount on issue of debenture, loss on issue of debenture, advertisement suspense, deferred revenue expenditure, all of these we term it as, yeah, kind of fictitious asset. Normally these appear in the debit column of the trial balance. Correct? We write off, but we don't write off in one shot. We write off over a period of time. The amount of portion which is not written off, what do you do? It goes to asset side, but Schedule 3 says that I will not allow this on asset side because this is not a real asset. It is a fictitious asset. Hence, we take it to liability side. And from reserve and surplus, we minus it. Yes or no? We minus it from reserve and surplus. So do you think there's some connection between this and this? So where should this come? Preliminary expenses. So when I prepare that working note 1A, I'll put opening and closing, GR, P&L. With that, what will come? Preliminary expense will come in bracket negative, because this is a part of your reserve and surplus. Okay, not okay. Why? Because of Schedule 3. Because of Schedule 3, this is a part of reserve and surplus. If you remember when we did 11th, 12th and foundation, for non-company accounting, we never subtracted this preliminary expenses from reserve and surplus. We kept it there on asset side itself. We kept it on the asset side itself because accounting standard never asked us to do that. Shifting was done because of Schedule 3. Schedule 3 said that in this company's balance sheet, I will not allow the fictitious asset on the asset side. So you reclassify and minus it from the reserve and surplus. Who said this? Schedule 3, Companies Act 2013. You will not believe this particular statement. Why preliminary expense is being subtracted from reserve and surplus? Or what is the treatment of this if I ask many people? To those people who are recently coming to me for accounting classes, they're asking, inquiries happening now from different academies. They have no idea about this. They've done the classes, exam given, still people are not aware of this. Now, can I continue? Bank OTBP, trade payable total. Then comes land building, plant machinery, investment, inventories, trade receivables, bills receivable, cash in hand. Investment in equity shares of S Limited, 12,27,200. Any problem? No problem. Additional information says that the profit and loss account of S Limited showed a credit balance of 120. So this is opening balance. They've told nothing about general reserve. Upon a general reserve is coming from the earlier years. What about preliminary expenses? The preliminary expenses given here is at the end of the year. Do you think preliminary expense happens in the middle of the year? It is a incorporation expenses. It is coming from the beginning. So since the company is incorporated, there could have been multiple amount of preliminary expenses. Let's say 1 lakh rupees. You've been writing off. The unwritten part is how much? 20,000. So this will also come in opening balance, also come in closing balance. So GR and preliminary expenses, though it is clearly mentioned here in bracket 1 April 19, means they're indicating this is opening balance. I'm telling, even if this is not given, common sense says what? It is opening balance, because preliminary expense cannot pop up somewhere in the middle of the year just like that. Because it is not a in-between year expenses. That any random year I'll do preliminary expenses. No. Preliminary expense always happens in the beginning of the year, when the company is incorporated. This is also called as incorporation expenses. So it is natural that this expenses is coming from beginning of the year. So both in opening and closing, I will include both of these. Okay, not okay. Now, S Limited paid a dividend of 10% out of the same. Out of means what? This line is a continuation of the previous line. In the previous line, they're talking about the opening profit. Opening profit is pre-profit. So they're talking about pre-dividend. Okay, not okay. And this dividend is given middle of the year. Middle of the year, final dividend of previous year. But I'm not applying that assumption. Should I apply that assumption? Should the dividend is given middle of the year, it is final dividend? No. Because the question very clearly said that it is out of the previous year profit. So I'm not putting any assumption. Those 8 cases I'm not applying here. Because question apparently said that it is pre-dividend. The dividend was correctly accounted by H Limited. Oh my God. They have recorded correctly. No need to reduce from investment. Why? Because already it is reduced from investment. Upon this investment is after reduction or before reduction? After reduction. So if the question asks you in MCQ, what is the actual investment that is paid at the time of acquisition? So with this 12 lakh 27,200, you'll add the pre-acquisition dividend, you'll get the opening investment. Pakka MCQ question. Okay, not okay. Siddharth is very happy. And Siddharth understands some things, no? His face like, wow. That gives me confidence. That I'm teaching properly only. No, Siddharth, point number 2. The plant and machinery of S Limited, which stood at 6 lakh on 1 April 19, was considered worth 520 on the date of acquisition. Means from 1 April to date of acquisition, I have to do the depreciation. Then I'll get the book value on the date of acquisition. So market value and the book value will compare and get the devaluation. 6 lakh is which stood at 6 lakh on 1 April. So this is book value. Stood at. Depreciation is 10%. Prepare as per schedule 3. I wouldn't have done this question, but I'm only doing because of primary expenses. Okay, not okay. I'll do working note, rest you will do. The working note 1A.
Written off. Other part should only be accounting for reserves and surplus on the date of return. That's all.
Come again.
Surplus.
You're telling that 20,000? Which is not yet written off.
The year is write off some part of the product.
Okay. Now what she's asking is, sir, this end of the year, 20,000 is preliminary expenses. 20,000 you're telling that is coming beginning also. Somewhere in the current year, preliminary expense would have been written off, no? So that part I have to add back and get the opening balance. Correct? No. Opening minus written off is the closing balance. Closing is given. With that, if I add the current year ka write off, I'll get the opening balance. For you to add off the data, they should have given the preliminary expense written off, which is not given. Now let's understand this way. What is the closing balance? 20,000. How do I know that? Question says that this is the preliminary expenses, 20,000 coming at the end of the year. Correct? No? Why? Because this is the balance sheet of 31st March 2020. 31st March 20 का balance sheet के अंदर 20,000 rupees will be the opening or closing balance. Closing balance. Any problem? Question also set in bracket in 1/4/2019. Here 1/4/2019 is given, which means what is the opening balance also? 20,000. So during the year, nothing is being written off. 100% wrong. Who's not saying it? Now the question is not giving me the write-off part. Can I go and fight with the question? Hey, you cheater fellow, you did not give me the writing off portion. Give me. Your question is conceptual. Now imagine in the exam, same question comes. In the additional information, they say that during the year, preliminary expense written off is 5,000 rupees. Then my opening balance is going to be 25,000. So for me to have a different opening balance, current year ka data should be given. In the absence of that, I'm taking 0. And I'm not taking assumption here. The question very clearly said that 1/4/19. So this is there in 1/4/19, 20,000. Year end also 20,000. So current year, they have not amortized. Now, as an auditor, you tell me people, you get this scenario, you audit this company. You audit this company. They are not willing to write off the preliminary expenses. Who? Client. Who are you? Auditor. You are going to sign it. Will you go and tell him that, hey, you are not writing off the preliminary expenses, I'll drag you to the court? Is it the job of the auditor? No. Will you say that, no, I'll not sign your balance sheet? Then you can never sign any balance sheet. You need paisa, no? Future kids ka school fees, who will pay? You have to pay. House you have to buy. From where will you buy? If you get emotional, no, I will not sign any balance sheet which is having small mistake, I will not do anything, means you sit there only. What will we do? We will qualify the audit report. To qualify doesn't mean what you are thinking in your mind. If you study audit ke andar qualification has got a different meaning. So you will qualify the audit report telling that everything is true and fair, subject to so and so. You are here to state an opinion on the financial statement. It is not your responsibility to sit and correct everything. You can give advice, opinion to correct it. If they don't correct it, you can't go and fight with the client. And you never should. So you will just state your opinion that everything seems to me true and fair except this part. That's all. So now it is up to the company and their shareholder to fight among themselves. So shareholder in the annual general meeting, they'll ask, When auditor is telling you to write this off, why did you write off? What stopped? Like that, who will question whom? Shareholders will question company. Company, let them answer. நீ என்ன பண்ணணும்? பார்க்கணும். இந்த பக்கம் ஒரு டீ காஃபி இருக்கும், இந்த பக்கம் பஜ்ஜி போண்டா, அப்படியே ஜஸ்ட் என்ஜாய் த ஷோ. முட்டுறது அவன் வேலை, நம்ம முட்டி விடல. We didn't make the we told what is correct. Let the husband and wife fight. We told what we have seen. We told what is correct. Let husband and wife decide what to do. Enjoy the game. Now, let's continue back. Enava? This is 1920, no? This is all reserve and surplus account. Reserve and surplus account. So 1,419 by balance brought down. Once again. First I'll do closing. 31st March 20. To balance carried down. GR nothing mentioned. We'll take the opening balance as it is. Sorry, GR is given in the question. I'm so sorry. How much? 420 given. Take as it is. Okay. Then P&L how much? 328. Less terminal expenses 20,000. Tell me the net balance, please. 420 plus 328 minus 20,000. 7,28,000. Any difficulty? This is the net closing reserve and surplus. Yes. Enama? Had they told current year ka preliminary expense so much, then we have to add that and gross up.
So 5,000 write off करा तो 55,000 minus.
No, ba. See, opening balance 25,000. Let's say 5,000 is written off. Closing is 20. Now, this is not given. So I have to go upward. So with 20, what if I do? I'll get 25. Add 5,000.
I mean,
You will not put this in pre-profit. Opening, where do you, with this data, where do you put pre-profit column? No. Now, GR, nothing mentioned, but the bracket says it is since 1 April 2019. So 420 will continue as it is. 420 will continue as it is. P&L, the balance is given. Kahan ba? 120 is given, no? And less preliminary expenses 20,000. How much is the balance? Don't fight. It's okay. 5,20,000. Any problem? Dividend is paid when? 111. 111.19. 2 dividend. How much? Paid up capital 8 lakh into 10%. 8 lakh into 10%. 80,000. So what is the current year's profit? 31,320 by P&L. Sorry? 2,88,000. This how many months profit? 12 months profit. Tomorrow this will become 24 and 36. Wait and watch. In this, how much is pre, how much is post? The company was, no, the shares was acquired on 1st October. So April, when is the financial year? 1920, no. So April, May, June, July, August, September. September 30, October 1, same. 6 months is pre-profit, 6 months is post-profit. 6 months pre, 6 months post. So we have time adjustment here, time adjustment. Any problem? Srinidhi, any problem, Gana?
No.
She's not listening, Srinidhi?
Sir, I'm here, sir.
Okay. So far clear? Working note number 2, calculation of AOP. Calculation of AOP. Particulars, percentage, pre-acquisition profit, post-acquisition profit. Opening balance of GR how much? 420, 120, negative 20. 420, 120, negative 20. This is opening data. This is opening data. With this, I have to add current year's ka profit. So time adjustment of current year's profit. How much is the current year's profit?
2,88,000.
2,88,000 into 6 by 12. How much it is? 1 lakh
44,000.
44,000 and
1,44,000.
1,44,000. Got it?
Sir.
From this, I have to minus dividend. Dividend is pre or post? It is given out of the pre-profit. So it is pre-dividend. So less dividend, pre-dividend. How much? Full 80,000 you take. Be careful. Full 80,000. Then revaluation. Revaluation. Working note number 5. Calculation of revaluation profit bar revaluation loss. Market value should be on which date? 1/10/19. How much it is? 520 it is. Is considered worth 520 on the date of acquisition. 520 is the market value. I want to compare this with the book value as on 110. But I don't have 110/19 ka book value. But I have the book value of 1,419, which is how much? 6 lakh. Minus depreciation from 1,4 to 110, which is 6 months. So 6 lakh into 10% into 6 by 12. Sorry? 33,000. Okay. 30,000. So balance is how much? 5,70,000. 5,70,000 is the worth of the asset, but today's market value is 520. So how much is the fall in the value of the asset? 50,000 is the fall in the value of the asset. So this is revaluation loss. On the revaluation loss, we have a savings of depreciation. Savings of depreciation. Okay, not okay. So working note number 6. Sorry? Yes. So revaluation loss, what will you do? Less reval loss minus how much it is? 50,000 from the pre-profits. Calculations of savings in depreciation. Depreciation on how much it is? 520. 5,20,000 into 10% into remaining 6 by 12. That is from October to March. 26,000. Depreciation already charged. Which is 6 lakh into 10% into remaining 6 by 12, which is October to March. How much you charged? 30,000 you charged. Whereas you should have charged only 26,000. So how much extra you have charged? 4,000. That we have to reverse. Reversal of depreciation is savings. Reversal of expenses, savings. This will increase my profits. Savings and depreciation. 4,000 is saving in depreciation. So add savings in depreciation. How much it is? 4,000. Any other adjustments? No. No inventory adjustments. No bonus adjustments, nothing. Tell me the final profit. 5,34,000. 1,48,000 total. Now tell me people, what is the H limited ka percentage?
80%.
He has acquired 64,000 shares. And the company is having 80,000 shares out of 64,000. So it is 80%. 8 8 is 64. So 80%, 20% is minority. 4 lakh 27,200.
1 lakh
1 lakh
18,400.
18,400.
29,600.
29,600. Next, calculation of day. Calculation of cost of control, goodwill CR. Investment after pre-acquisition dividend.
ऐसे mention
नहीं करे तो चलता है, कोई problem नहीं. How much it is? Donkey fellow. The question said very clearly that the pre-acquisition dividend is recorded correctly by H Limited. Means what? They have minus from the investment. So 12,27,200 is the investment. 12,27,200 is the investment after adjusting pre-acquisition dividend. Compare this with less net asset. Same question. Share capital is in
8 lakh in pay.
on the date of acquisition or the end of the year? That you tell me tomorrow, not today. How much is share capital at the end of the year? Oh shit. What is the share capital? 8 lakhs
Into 20%.
into 80%. How much it is?
6 lakh 40.
6 lakh
40,000.
40,000.
Plus
Pre-acquisition profit coming from working note 1B 427,200 total. 10,67,200 worth of assets you got, but you paid how much? 12,27,200. Oh my god. 1,60,000 rupees you paid extra goodwill.
yeah.
Calculation of minority interest.
8 lakh into
Share capital 8 lakh into 20%.
1 lakh.
1,60,000. Pre-profit, post-profit, how much?
1,06,800.
Post
29,600.
total
2,96,400.
minority interest matching, not matching. 296,400. Superbly matching. Now, calculation of consolidated reserve and surplus. H Limited reserve and surplus is how much? 960, 228,800.
11 lakh 88,000.
11,88,800. Should I minus pre-acquisition dividend? No, they've already taken to investment. Nothing is gone into reserve and surplus. When nothing is gone in dividend income, P&L, reserve and surplus, why should I reverse it? Add post-acquisition dividend. How much? Sorry, post-acquisition. Okay, sorry, post-acquisition profit.
1,80,400.
1
Lakh 18,400.
400.
13 lakh 7,200.
7,200. Let's say reserve and surplus is matching or not matching. 13,7,200. Goodwill how much? 160.
1 lakhs.
Perfect. This correct அப்படினா everything is correct. Last question. Over. Back up. Tomorrow we are doing bonus. 2 classes on bonus. Working note 2. Okay. Those who want to note this, take a photo of this. I'm going forward. Over.
Working on 2 years.
CFS is homework. CFS is homework. App में है. Question is there in application. You can take from there. Note question number 10. Scan a question 10. What do you want? Harosh? I'm telling you, this topic you have to do a lot of revision compared to any other topic.
The 50 term is the
Everything is easy. There's nothing tough. So easy. बस
Sir,
You realized it.
इसके related examples है ना? ये example 18 का class.
उसके बाद भी है ना
बाकी है
இருக்குல்ல நான் எங்க முடிச்சேன் done. So guys, that's all from my side for this session. I'll see you tomorrow, same time, 11:45 a.m. sharp. Until then, bye bye. See you. Take care.